Hi everyone, welcome to this week's market forecast for the week ending April 16th, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the euro, the pound, the Australian dollar, gold, and Cardano. We have several major currency pairs that are sitting on key levels. I'll give you an update on gold's double bottom that I mentioned last week, and I'll also discuss the decision that Cardano has to make over the next 24 hours. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up, we have the EURUSD, and last week I mentioned this breakout from the trend line on the 4-hour time frame. So here we are on the 4-hour, and you can see where we have this trend line off of this recent high. It also connects with this one. We have this touch here, and also this one. Now, this candle is the one that broke out, and I was discussing this breakout through this area. So we had a nice little run up last week, and I mentioned how the 119.50 area could be resistance. However, Friday fell just short. Now, if we look at the weekly time frame, you can see just how significant 119.50 has been over the last few months. All right, so notice back here, it was resistance, it was support on this candle, broke below it, and became resistance once again. But I do want to point out one thing, and that is, if we actually look at Friday's high, that's also a significant resistance area. It was resistance back here through this entire range, and then it was support for about 3 weeks. All right, so for the week ahead, I would say that this area right between 119 and 119.50 is going to be resistance. All right, we need to see a close above this area in order to expose some of these recent highs. If we do see a rejection from this area this week, some bearish price action from this area, we could see a return to these lows just above 117. So last but not least, what I will say is just be a little bit careful with the EURUSD. Even though we do have some key levels that are playing out pretty well, including this area between 119 and 119.50, all in all, the pair is just sideways. All right, we have this downtrend, but it's been pretty choppy and we don't really have a lot of momentum here like we had late last year. All right, during this rally, it was a lot easier to trade the EURUSD, even out of this consolidation. We caught this trade last year and rode it up to this area, this resistance area. But right now, even though we have this downtrend, the pair has really just been sideways within this range. So you have to be a little bit careful here. Trying to go for 200 or 300 pip targets is going to be a challenge. My advice, if you're going to trade this, is to look for those shorter trades, such as a 50 pip or 100 pip target. So the pound is next, and here on the daily time frame, you can see where Friday caught a little bit of a bid from that 136.70 level. So it was support back here and support once again on Friday. You can also see where we have this descending channel off of this high, connects with this one and also this touch. The bottom connects with these two lows. So really for the week ahead, this is going to be a story of whether or not 136.70 holds, and we do see a return to the top of this channel. If the pound can break out of this resistance area, we could see a return to the 140 level. You can see where this was resistance back here, and a close above that, of course, would take on this recent high up around 142. Now, I also want to point out this trend line that extends from the May 20 low. All right, so this is the May 20 low back here, and you can see that we have several touches on this trend line. Now, at the moment, this level comes in just below 136.70. So this week, this area, this confluence of support is going to be critical. Anywhere between 136.70 and perhaps down toward 135.50. All right, this area is going to be critical to hold as support. If it doesn't, we could see the pound move lower toward 134.50 with a break there exposing the 131.50 area. So essentially, if we do see a close, a daily close below this trend line this week, keep an eye on the bottom of this channel, followed by 134.50. Alternatively, strength here from this area and a return to the channel top with a close above that would expose 140 and perhaps the 142 area. So I've talked about this pattern on the Australian dollar a few times. We had this rally back here, and the pair formed what looked like a head and shoulders pattern. Now at the moment, this is still holding up because the pair is holding below this neckline. At the moment, that comes in just below the 77 level. All right, you can see where it was retested on these candles and again last week. So as long as the pair is below this trend line, just below 77, I have to respect this potential. Okay, the potential for a move lower. And like I said before too, the measured objective for this pattern, if we take the height of this pattern up here to the top, it's about 400 pips, and measuring from this breakout 400 pips lower, we get a measured objective somewhere around 72.50. Okay, so whether or not that happens is going to depend on what happens between this trend line and this horizontal support right around 75.20. You can see where it was support back here, and the pair did catch a bid from that area, even formed a bullish pin bar. All right, so right now we are just sideways here. So this makes it a little more challenging to figure out where the pair is going in the short term. But again, I do have to respect the head and shoulders pattern as long as we are below this trend line on a daily closing basis. If we see the pair move lower and close the day below 75.20, all right, that could open up 74 along with that measured objective around 72.50. Alternatively, a daily close above this trend line right around 77 would negate this pattern and expose some of these recent highs. So gold is still coming off that double bottom that I mentioned recently from the 1680 area. So you can see how this has been support for a long time. It's also a key fib based on the 2020 range. All right, so as long as it's above 1680, I have to respect the bullish potential here. And you can also see that we have a very clear double bottom. Now it's technically a potential double bottom because we do need to see gold take out this area right around 1760. All right, notice back here, 1760 was resistance. It then flipped to support through this area, support once again here and here, then gold closed below it. And since that time, this area has been resistance. So we do need to see a daily close above this area in order to expose the measured objective of this double bottom up around 1830. Now 1830 is also a key fib based on the 2020 range. It's also a key horizontal level. So we'll see how this one plays out over the week ahead, but I do like the potential here for a bounce, especially when you consider that the pair recently retested this trend line just before it formed this double bottom. Now 1830, depending on if and when gold is able to break above 1760, okay, this 1830 area could coincide with the trend line from some of these recent highs. So this could be a confluence of resistance between 1830 and 1860. Now, obviously, if gold were to break that area on a daily closing basis, we could see a breakout from this pattern, okay, up towards some of these recent highs. And if I draw that out, one level to keep an eye on is going to be these two recent highs right around 1960. Now, beyond that, we have gold's all-time high up around the 2075 mark. But buyers have a lot of work to do between now and then. First, a daily close above 1760, which would expose the 1830 area. Now, alternatively, if we were to see gold rotate lower and retest this area and then close the day below it, that would negate the bullish potential here and expose this trend line, which could be just above the 1600 area. And last but not least is Cardano, that's ADA. It's a cryptocurrency that I had an interest in last year. I bought it before the big rally, and I still have some of that position on, but I am looking to add more. But right now I'm waiting to see what happens with this pattern. All right, so if we look at the 8-hour time frame, you can see where we have this ascending channel that's formed after the massive rally over the last few months. All right, so we had the rally back here, and since that time, we have this consolidation pattern into an ascending triangle. So typically a pattern like this will break higher. So we should see ADA break resistance up here around 130, followed by 150. However, the entire crypto market right now, especially this weekend, is sitting right on support and looking a little bit indecisive. All right, furthermore, Cardano has been pressuring this support level, so I'm not ready just yet to say that we are going to break higher, because notice where we had this move up to resistance, okay, back down, up to resistance again, back down. This started to form the ascending triangle, and since that time, we have just been churning sideways and unable to break above the 130 mark. Even today's session sold off right around 130. Furthermore, it's just pressuring this support level right around 119, 120. So really the bottom line is it's going to come down to what happens between this 120 support area and 130. If we do see a daily close above 130, that should expose the 150 area. Now, if it can close above that, it would confirm this ascending triangle and likely send Cardano much higher this year. My personal targets for Cardano over the next 5 months are $10 conservatively, but I do think that $20 could very well be in play over the next 5 or 6 months. Now, if we do see Cardano break that 120 support area, we could see a pullback much lower, perhaps down to $1 or even below that. And one thing that I noticed yesterday that I did want to point out is if we move out here to the daily time frame, you can see back here in August, all right, we had a very similar pattern from that March crash. Okay, this was the March low, and we had this huge rally up into August of last year, and Cardano formed a very similar pattern, a very similar ascending triangle. We had the resistance line up here, and it also formed this trend line based on several lows. You can see where it tested it right here, broke below it, and then we got about a 40% pullback over the next few weeks. Now, I'm not saying that this will happen again because obviously nobody knows where the market is going, but if you just look at the similarity between these two patterns, all right, they are pretty similar. We had a big rally, and then we got an ascending triangle, all right? Right now, we've had this big rally, and we have another ascending triangle. So if this were to play out in a similar fashion, a 40% pullback from here would put Cardano obviously much lower than where it is today. All right, so from this 120 area, let's say we get a break and a 40% drop, that could put Cardano between 70 and 75 cents. So I would basically look at it like this. If we do get a break below 120, okay, a close below the 120 area, I would look at this area between 70 cents and 80 cents. Okay, and you can also see where this was a key support area earlier this year. Notice this low right here. We then have these lows through this area and also this one. So this area between 70 and 80 cents would be the next key support area if we do see the 120 region break. Alternatively, again, a close above 130 would expose 150, and a close above 150 would confirm this as a bullish pattern and send Cardano much higher up toward $2, $3, etc. within the next few weeks. All right, so right now I'm just waiting for confirmation here to see where Cardano is going. I did start to scale into a position late last week here around 120, and right now I'm in a little bit of a profit. So I'm kind of just waiting to see where the next few hours go. If I start to see Bitcoin and Ethereum break down, I will likely get out of my long position here and then wait for a close below 120 in order to look for a buying opportunity between 70 and 80 cents over the coming days. So I'll be sure to give updates on this on Twitter, so be sure to follow me. Justin Bennett FX is my handle on Twitter. I'll be updating you guys over the next few days as far as developments with Cardano as well as Bitcoin, Ethereum, and VeChain. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.